Welcome to The Explainer. Today, we're diving into the financial story of SOMPO Holdings. They're an insurance giant with an absolutely remarkable track record of rewarding its shareholders. So, what's the secret behind their success? Let's get into it.
So what makes SOMPO really stand out from the crowd? Well, it all starts with one single, astonishing streak of impressive, sustained growth.
12. For 12 straight periods, SOMPO has increased its dividend payout. Now, that's not just a good year or two. That is a powerful pattern that signals some seriously deep financial stability.
And the scale of that growth is just staggering. We're not talking about small, tiny bumps here. Over those 12 years, the dividend is multiplied by an incredible 7.5 times. That is some serious long-term value creation.
You can really see the acceleration on this timeline. It kicked off at a pretty modest 20 yen way back in 2013, and now it's on track to hit a forecast of 150 yen per share. The momentum here is just undeniable.
And as you'd expect, a strong and reliable dividend policy like this has not gone unnoticed by the market. Not at all. It has directly fueled shareholder confidence, leading to a more than 5-fold increase in the company's stock price in about a decade. It's a perfect example of that direct link between rewarding shareholders and increasing a company's total value.
An impressive record like this doesn't just happen by accident. It really leads to the central question: what is the engine powering this incredible financial performance and this consistent dividend growth?
Well, the answer lies in the company's really powerful and strategic business structure.
The company's profit comes from a pretty diverse portfolio. You've got domestic insurance, life insurance, even nursing care. But one of these segments is doing all the heavy lifting. The overseas insurance business is, by far, the biggest contributor to their bottom line.
So, the crucial point is this: while their domestic Japanese market provides a really stable foundation, it's the strategic international expansion that's fueling the kind of massive profit growth you need to support such aggressive dividend increases. This really reveals the two sides of SOMPO's success. They have a solid, reliable domestic base in Japan, and that provides stability. But their ambitious and expanding global reach, that's what provides the high growth potential. It's the combination of those two things that makes this strategy so powerful.
But, just generating profits is only half the battle. How does that profit reliably turn into dividends for shareholders? Well, it's not by chance. It's part of a very deliberate and transparent corporate strategy.
This comes directly from the company's official policy. They have publicly committed to returning 50% of their core earnings to shareholders. This isn't some vague promise, it's a formula, and that formula makes their shareholder returns predictable and incredibly reliable.
This policy creates this powerful virtuous cycle. First, strong business operations, especially overseas, drive profit growth. Then, a disciplined 50% of that profit is returned right back to shareholders, which builds investor confidence. And the remaining capital? That gets reinvested back into the business to fuel even more growth. It's a fantastic, self-sustaining loop of value creation.
Okay, so let's tie all of this together. What are the key takeaways from this for anyone looking at the company or, the market in general?
First, you have a proven decade-plus track record of dividend hikes. That's huge. Second, this growth is powered by a clearly identifiable engine, that profitable and expanding overseas business. And third, it's all governed by a transparent and disciplined shareholder return policy. You put all that together, and what you get is a powerful signal of strong financial health and deep confidence from the company's management.
Ultimately, SOMPO's journey provides a fascinating case study. It really shows how strategic diversification, particularly into global markets, combined with a clear and disciplined approach to how you use your capital, can create sustainable, long-term value for a company and its shareholders.
And that leaves us with a final thought to consider. When we see a company like this successfully pivot towards global growth, what does it tell us? How can the strategic choices of a single corporation give us clues about broader economic shifts and maybe where the big opportunities will lie ahead?